Hello, welcome back to our new video where last time we studied BK question paper and the final account sum we have selected for our video. With the same February 2026 paper, we are now moving towards dissolution of partnership firm. This year basically the sum was very easy. We will be looking towards the sum. Rajiv, Sanjeev and Mahesh were partners in the Janki Traders. Here it should be noted they have already given the name of the firm. Okay, sharing profit and losses in the ratio, profit sharing ratio is also given 2 is to 2 is to 1, and in the following balance sheet as follows. So we will be seeing the balance sheet. It is as per 31st March 2022. Liability side they have given Rajiv, Sanjeev and Mahesh capital, that is 2 lakh 40, 80,000 and 80,000. General reserve they have given, creditors they have given, bills payable they have given, machinery, investment, debtors, less RDD also they have done, stock and bank. So what I have done for the easy understanding of the sum, I have already marked which entry will be going on which account and which side. So for capital account, we will be preparing separate three accounts. It is also should be noted that we have to make three accounts. That is realization account, second will be partners capital, and the third will be cash bank account. For such situation, the amount from Rajiv capital account will be posted to his capital account on the credit side. As always, note that capital shows credit balance. So capital always show credit balance and asset always show debit balance. So Rajiv, Sanjeev and Mahesh will be getting their capitals posted to their particular capital accounts on the credit side. Next, also note that the general reserve or any type of reserve, that is general reserve, reserve fund, or it may be like any reserve, it should be distributed among the partners in the profit sharing ratio. So for that sake, I have written this partners capital account on the credit side. Creditors and the bills payable will be posted or transferred to the realization credit side. Same with the asset side, machinery, investment, debtor, stock. All this will be posted to the realization account debit side. Only for the bank, we will be preparing a separate account, and that bank will be given the separate opening entry on the debit side of the bank account. They have also given us the adjustments. Assets realized as under realized, in short, or in say that they are sold. So machinery was sold for 1 lakh 80. Here you should be noting that regardless any of the amount given in the balance sheet, you have to consider this amount for the selling amount. Profit and loss we should be ignoring. Stock they have given, investment amount and debtors amount they have given. So we have posted that original asset entry on the debit side of the realization account. So selling entries, that is realized entry, will be going on the credit side. Dissolution expense will be on the realization debit side. Goodwill of the firm they have given as 96,000. Remember, it will be going on the realization credit side. If in case the goodwill is given in the balance sheet, that is on the asset side, we have to distribute it to the partners capital account as per we have distributed the general reserve. So moving towards our realization account, if you see it properly, as per mentioned, I have transferred the sundry assets and all the assets I have transferred on the debit side, that is machinery, investment and the stock, with the book value. You should be you should be remembering, or you should be uh, trying to understand that all the assets should be transferred to the realization account on the book value, that is amount given in the asset side of your question. Then we should be noting that I have transferred all the liabilities on the credit side with the book value. When we are transferring, it should be on the book value. When we are selling, it should be on the selling value that is given in the adjustment. If the selling value is missing in the adjustment, we have to take the book value. So assets I have marked in the debit side, liabilities on the credit side. Then what I have done, I have, as per adjustment, I have sold the assets and debited that amount to the bank account. So by bank account, I have written on the credit side machinery. If you observe here, the machinery book value is 2 lakh and the selling value is 1 lakh 80,000. The gap of 20,000 should be ignored. Machinery, stock, investment, debtors, and the goodwill they have given in the adjustment, that I have taken it on the credit side. So I have also marked here assets should be realized at the mentioned value in the adjustment. Then as per the situation, what I have done, assets transferred and they are sold. Same with the liabilities, liabilities transferred and they are paid. They are not sold, they are paid. So the amount will be getting out from our account. So I have credited to bank account and the liabilities should be realized at the value mentioned in the adjustment. But our question remains silent about the values should be mentioned. So I have taken here at the book value. Dissolution expenses they have given us 12,000, and then by after completing the whole entries in the realization account, what I will be doing, I will be checking which side is more. So I got that the credit side is more and it is 8 lakh 28,000. So the difference from the credit and debit side is 16,000, and that 16,000 I have uh, divided and distributed in the capital uh, account in the profit sharing ratio. Next, we will be preparing partners capital account. So as I told you, it will be giving you credit balance. So 2 lakh 40, 80,000 and 80,000 here as per the question. Then the general reserve, the amount I have distributed among the partners in the 2 is to 2 is to 1 ratio. Realization profit, which was there from our realization account, that I have transferred here. The entry was there on the debit side, so here it will be going on the credit side. So after that, if I see there are no further entries in the capital account, I will close the entries and transfer the balance as balance carried down, or here at I can write as to bank account, because our firm is going to close, so the partners will be getting their share. Finally, the cash bank account, the entry I have passed in the realization account as dissolution expense on the debit side. So here it will be on the credit side of the bank account by dissolution expense as 12,000. Liabilities realized were on the credit side, that is the liabilities paid. Total amount I have written here, it has 2,16,000. Same with the asset. Asset were sold at specific their values. So I have considered the total value, it has 6,12,000. Here the last final will be the Rajiv Capital, Sanjeev and Mahesh Capital, which will be getting the amount transferred from our capital account. After completion of all such entries, our cash bank account should get tallied at 6,68,000. Here, it should be noted, we have to tally, or we have to confirm that our cash and bank account should be getting balanced. There should be no balance brought down or carried down in the cash or bank account. So it will be treated as our question is right. For the working note, I have prepared the general reserve distribution. 24,000 was the value and 2 is to 2 is to 1 was the ratio. So 24,000 into 2 divided by 5. So I got it as 9,600. Same with Sanjeev, and for Mahesh only it was 24,000 multiplied by 1. divide by 5, so it will be 4,800. Realization profit was same 16,000, so here it will be same ratio 2 is to 2 is to 1. So 16,000 into 2 divided by 5, it will be getting as 6,400. Same for the Sanjeev, and for Mahesh 16,000 into 1 divided by 5, so it will be 3,200. Hope you followed with the dissolution sum. So we will be meeting in the next video with the next concept. Till then, thank you.